Home improvement is a multi-billion-dollar machine. For investors, capturing even a fraction of a local market can build serious long-term wealth. But the traditional path into this industry forces you into a specific box, the retail showroom. You sign a commercial lease, fund an expensive build-out, and hope foot traffic covers the overhead. If you're a corporate professional or an aspiring owner, this creates a bottleneck. You want the cash flow of a home services business, but tying up capital in commercial real estate feels like an unnecessary anchor. You're left weighing two different paths. Do you sink hundreds of thousands into a retail location, or do you take an active service-based route that runs out of a mobile fleet? The demand for custom window treatments is already there. What holds most potential owners back is the restrictive fixed cost of a physical storefront. Bloomin Blinds bypasses the retail model entirely by operating through a mobile-first franchise structure. Founded by a family in 2001, they started by proving that you don't need a storefront to sell premium blinds, shades, and shutters. That approach has scaled. The brand now operates over 82 franchise units across the United States. Their operating philosophy is straightforward. Instead of making the customer drive to a strip mall, the franchisee brings the custom window treatment showroom directly into the customer's living room. By swapping a fixed commercial lease for high mobility, the financial and operational equations of the business shift heavily in favor of the owner. Let's look at the actual numbers. The initial investment range for a Bloomin Blinds franchise sits between $101,900 and $150,500, requiring $50,000 in liquid cash. Plotting capital against agility, traditional retail sits high on capital. The mobile model drops you into the high-agility, low-capital quadrant, with no architects or landlords to pay. This compresses your timeline, letting you launch your fleet months faster than competitors waiting on construction permits. But there is a clear operational trade-off. Without a sign in a busy shopping center, customers won't just wander in. You have to aggressively pursue local networking and targeted digital marketing to build your pipeline. For a capital-conscious investor, that's a worthwhile exchange. You keep your cash out of a 10-year lease and deploy it directly into acquiring customers in your specific territory. Once you acquire those customers, the business relies on a dual revenue engine to maximize the value of every appointment. The first half of that engine is on-site repair. Your team goes to homes and commercial spaces to fix broken slats, faulty lift strings, or damaged shutters. A repair appointment acts as a highly effective lead generation tool. Solving a frustrating problem inside the home builds immediate trust. Technicians perform a full room assessment, quoting total replacements on site, converting a small repair into a high-ticket custom sale. The challenge here is operational balance. You and your staff must be competent at technical repairs while simultaneously executing high-end consultative sales. If you can manage that balance, the model de-risks your balance sheet. The profitable repair work funds your customer acquisition for the high-margin installations. Running a fleet of vans efficiently requires serious infrastructure. Without a physical showroom to anchor the business, technology has to carry the load. During an in-home consultation, franchisees use an augmented reality tool called the Window Visualizer. Homeowners don't have to guess what custom shades will look like. Instead of a tiny fabric swatch, they see the product digitally rendered on their actual windows, which drives up closing rates. On the back end, proprietary management software handles the logistics, coordinating complex fleet scheduling and generating accurate on-site quotes in real time. To hit peak efficiency, you have to play by the rules. Franchisees must strictly adopt this corporate tech stack. There is no room for pen and paper accounting. This software ecosystem effectively replaces the physical showroom. It allows you to scale to multiple territories while maintaining a frictionless experience for the buyer. To maintain this partnership, franchisees pay a 7% royalty and a 2% advertising fee. In exchange, you aren't starting from zero. These fees provide direct access to 2 decades of brand equity, comprehensive headquarters training, and national marketing support. You also operate within an exclusive, protected territory, ensuring your local market share is secure. This setup is designed for a specific mindset. It's for the investor who wants the autonomy of being a local CEO, but knows they shouldn't spend 5 years trying to invent their own routing software or branding guidelines. Viewed through that lens, the royalty is the price of a proven blueprint that independent contractors often spend their entire careers trying to build. Bloomin Blinds protects its margins by eliminating retail overhead, operating a mobile fleet, and utilizing a dual revenue strategy of repair and sales. The exact profile for this model includes driven corporate professionals, seasoned sales leaders, and multi-unit investors looking to diversify. You have to prefer active, outbound community networking over sitting behind a counter waiting for a customer to walk in. And you need the drive to manage a team that can execute detailed, hands-on repair service in the morning and close a large-scale motorization package in the afternoon. If that aggressive, mobile operational style matches your skill set, this franchise offers a highly strategic, low-overhead entry point into the home services sector. Deciding if this mobile infrastructure matches your specific wealth-building goals necessitates a deep dive into the underlying data. Review the financial disclosure document, verify available state territories, and analyze existing unit economics. Connect with certified franchise advisors who can provide you with exclusive data and guide your due diligence process step by step. To start that process, go to nationalfranchiseassociation.com. Making the right investment takes objective facts and expert guidance. The NFA is the premier resource to help you validate this opportunity.